Hey guys, you're back with Steph and Dennis, and today we're answering the question, how should you choose your credit cards? We haven't talked much about credit or credit cards here on the channel before, but it is a super important topic when it comes to your money and managing your personal finances. It's kind of similar to a topic we've talked about before on the channel though, which is with the big banks and how likely everyone or most people start out having all of the different accounts at that same one bank. So your checking card and therefore your debit card, your savings accounts, and probably even your investment accounts as well, and likely even your first credit card. Now, it's not necessarily a bad thing having a credit card at your same bank or at a big bank in general, but you do have more options that you might not have looked into before. So today we're gonna break all that down for you. So if you're excited for this video, this topic, and more content like it to come, show us some love down below, hit that subscribe and like button for us, and let's jump into it.
Okay, so we're gonna kick things off by talking about what credit cards are. And before I dive too deep, there's three ways that you can buy something. So you can use cash, you can use debit, and you can also use credit. So I'm not even gonna touch cash because I haven't had cash and I don't even know how long, and I'm sure you all know how cash works. But if we kick things off by talking about debit, basically when you're buying anything by debit, it means that you already have the money within your bank account, right? So let's say, for example's sake, I'm gonna go buy something for $25 and I have $100 in my bank account. What's gonna happen is that as soon as I buy that item, I'm gonna be left with $75 because that money's automatically taken from my account. And yeah, there's not really much to that, right? Now, on the other hand, with a credit card, similar to the one that I am holding up right here, you're making that same purchase, but with borrowed money, and you can make purchases up to your established credit limit. So there is a maximum amount that you can spend using your credit card. So now if we take that same example that we had given before where you spent 25 bucks, only this time on your credit card, this means you owe the bank or whoever your credit card is with that $25, and it'll show up on your credit card statement, which you can view online. So basically what this means is that your checking account is still untouched. You still have $100 in there, but now you actually have a bill payment to pay off in terms of your credit card. So you need to transfer over $25 in order to clear that debt and bring it down to zero. Overall, credit cards have obviously become really common and are used on the daily. I'm sure you've used one or know someone who's used one, but I think what's missing is the education around what's going to be the best card for you. And that doesn't necessarily mean credit card churning where you're looking for points here and there. For some people, it just means having one card that's consistent, that, that's hassle-free. And we're gonna talk about that, basically in a second here. So let's just jump right into it.
Okay, so we know what credit cards are now, but what are the different types? In my experience, I initially had my bank accounts, both checking and savings, at TD Bank here in Canada. And when I was about to head off to university, like 7 years ago now, my mom brought me into the branch and helped me sign up for a credit card. Now, I didn't know anything about the different types of credit cards. I didn't know much about credit cards to begin with, other than the basic how they function, but I didn't know there were different types, and I definitely just took the one that the bank recommended for me. And again, that doesn't have to be a bad thing. I do actually still have a credit card from that same bank, so it ended up being an okay option for me, but I do think it's important to know that there are other options for you, and you don't have to. You don't need to get the credit card recommended by that same bank you've been with. And before we dive into what all the different types of credit cards are, the first thing that you should be doing is figuring out your goal or your aim with having a credit card. So outside of buying things, of course, what is the main thing that you want to accomplish with your card? Do you want to get rewards, whether that's travel or gas points? Do you want cash back? Do you want to have low interest rates? Do you need to actually fix or just build up credit in the first place? Figure out for you what that main goal is. So let's say that your main goal is to build up your credit. One type of credit card is a student credit card that's exactly for that purpose. It's when you're new to credit and credit cards in general. Count how many times I've said credit in this video so far. But these student credit cards can typically be easier to get, and the aim of those is to help you build up your initial credit. Now, for the same aim, especially if your goal is to actually fix your credit score, if it's low right now and you want to improve that score, there is something called secured cards. So secured credit cards are offered on the condition that you secure the card. So basically you're offering up some sort of collateral. Typically it could be a refundable deposit on the card, and in that case, the credit card lender who's giving you that card, if you don't actually make your payments on it, they can then keep that money money to pay it off. So basically that's what a secured credit card is. Every other type of credit card would be unsecured, which means you don't have to put any sort of refundable deposit down in order to get it, which is obviously ideal and what you would be looking for if you can. And at some point in this video, we'll make sure that we go over what all the different credit scores are and the ranges, what counts as bad or good credit. But keep in mind that as long as you're in the average to good zone, you should have no problem getting an unsecured card. Next up, if your goal is to save on interest, so in this case, if you think you will or you're planning on carrying a balance on your credit card month to month and you know interest is going to accrue and you want to make sure that interest is low, this is an option for you. Now, I want to make it clear that this is not an option that we recommend. We definitely do not recommend carrying a balance on your credit card and having to pay back, well, aka going into credit card debt and having to pay that interest at high rates. You should only be spending money on your credit card that you already have, and so that you're able to pay it off in full, not the minimum balance, the full balance on your credit card every single month. We'll talk about that more in a second too, but I wanted to make that clear right now. Next up, if your goal is to get cash back or rewards, then you're in luck because there are cash back and rewards credit cards too. You can either gain a percentage back on your purchases or you can build up points that you'll get every time that you buy things that you can use for travel expenses. Now, these cards are typically some of the most popular ones, again, the cash back or travel rewards, and we both currently have cash back cards right now.
Okay, so now it's time to talk about credit scores. So credit scores are numbers that are on a scale from 300 to 850. And basically what they tell you and what they tell lenders and banks is that you're really good or not so good at borrowing money and paying it back on time. So your personal or individual score has become increasingly important over time. And kind of like what I mentioned earlier when it comes to, your big purchases like a house, like real estate, those are some key items that a lot of people have set milestones in their life. And, when it comes to your score, it kind of determines whether you're going to be able to make that purchase or not in a lot of ways, right? So what I'll do is I'll actually throw up a scale that kind of tells you where you stand depending on which score you have. But basically here in Canada, anywhere from 300 to 575 is considered a poor score. And on the flip side, anyone who has between 741 and 900 is considered excellent. If you don't know what your credit score is right now, let's say this second, you can actually check it for free yourself, which is pretty clutch. So you can either use TransUnion or Equifax if you want a free credit report. So basically with these two credit bureaus, you're allowed at least one free report each year from each of them. So that's exactly what I did back in January. And the great thing is that now they don't actually send you a paper copy. You can actually receive a copy of your report to your email, which is so cool because it's all online. There's also a really great solution that we've been using lately if you want more frequent checks. And we actually got a comment recently about it, but it's by a company called Borrowell. We actually got a comment a couple months ago asking us about Borrowell. So yes, we do read your comments. Make sure you drop them down in the comment box below. But anyways, we got this comment, we looked into Borrowell, and we actually found out that they partner with Equifax. So they actually make it super easy for you to download your Equifax free credit report, see it within the dashboard within Borrowell, and they make it super easy for you to do this without actually hurting your credit score, which I think is key for a lot of us, right? So basically what's going to happen is that you'll actually receive a weekly update on your credit score, and they'll let you know whether your credit score has changed. And what they do is they do a soft inquiry, not a hard check like I mentioned before. Typically, when you're doing a hard check, it's usually for a credit card or you're applying for a big loan, like a mortgage or something. So what they do is they do a soft inquiry and they're able to pull that information without it actually affecting your score. Now, if you do want to sign up for Borrowell, we're going to have their link down in the description box below and in our pinned comment. And once again, as usual, you guys already know the vibes. Like if you have any questions, if you have any comments, you want us to do another video covering this, just let us know down in the comment box below. Okay, so now back to the other question that I'm sure a lot of you have. What actually goes into your credit score? How do they actually determine what that credit score is? What are they looking at? Well, there's 5 parts. So it's your payment history, your credit utilization, your credit history, your credit mix, and your credit inquiries. Now, your credit utilization rate or your credit utilization in general, this is where things get a little bit more interesting because it's where your credit limit comes in, right? So we've said, if you've been following the Steph and Den Instagram page, I've mentioned that there's a benchmark of how much of your actual limit that you should be using. So let's say your credit card limit is $1,000. The benchmark is actually 30%. You don't want to be using more than 300 out of that 1,000. Your credit history, on the other hand, is measured in a length of time. So the longer that you've had your credit, the better it is actually for your score. Your credit mix, on the other hand, looks at the different types of credit that you might have. So for example, you might have a car loan, you might have your credit card, you might have your student loan debt, you might have, I don't know, your mortgage. These are all different mixes of different types of loans. You might also have, what do you call it? You might also have a line of credit as well. Okay, and lastly, we have your credit inquiry. So this is the number of accounts that you have, and it's also the number of accounts that you've applied for recently. So, you know, when you go to apply for a credit card and, you know, the guy at the bank has to do a hard check into your account, that's a credit inquiry. All right, guys, so that's a wrap on this video. If you liked hearing about the topics that we discussed, make sure you let us know down in the comment box below. Obviously, show us some love, like the video, subscribe as usual, you know the vibes. And if you guys, if you guys have any questions, if you have anything else that we didn't cover regarding credit cards, credit scores, whatever, let us know down in the comment box below. And by the way, don't forget to check out Borrowell. They're a really great service. It's a service that we've been using, and we wouldn't recommend it if we weren't using it. So by all means, check it out. It's down in the comment box below or the description box below as well. If you haven't checked out any of our previous videos, make sure you do check them out next door. And we will be back. You guys know the vibes. Let's go.